The U.S. economy may have emerged from recession, but the jobs recession is still going strong. When will we start to see a real turnaround in the employment picture? Well, for a preview of this morning's jobs report, I'm joined now by James Shugg. He's a senior economist at Westpac Banking in London. Thank you so much for joining us, sir. Now, the consensus is for non-farm payrolls to fall by 175,000 in October. That would be less than 200,000 for the first time since last August. Would that suggest that we're coming out of the danger zone?
Yes, good morning, Scarlet. Look, not quite. I think that we are going to see weakness on the jobs front continue for some time. However, we will start to see some of the indicators within the labour market report turning a little bit more positive as a precursor to an eventual gain in employment. It's a lot easier for firms to make a decision not to lay someone off than it is for them to actually decide to take someone on. Now, I think we're still at that point where firms are getting less aggressive in terms of job cutting, but putting people on still a little way to come yet.
So then could we see a period of extended job losses of fewer than 100,000, fewer than 50,000 before we actually see growth?
Well, to be honest, I think what will happen is you'll get a rogue positive at some point in the next few months. Just like back in 2007, we got a rogue negative on payrolls before we saw a resumption of positive growth, before the real negative trend really began in 2008. But sustained positives on payrolls are still going to be some way away, well into 2010. I've got to say, though, I mean, hours worked is one of the indicators we'll certainly be watching for a clue to the eventual upswing in payrolls, because at the moment the hours worked numbers are miserable. They're still declining. You'd expect to see hours worked turning higher before you get sustained increases in payrolls. Right.
I believe the last report had it at 33, a decline to 33. A lot of analysts and economists have made the suggestion that a tenth of an hour worked equates to 100,000 jobs created. How important is this hours worked component?
Oh, it's vital. I mean, not just the weekly number, but also the aggregate hours worked, because what firms are going to be doing is they're going to be working their existing labour force harder before they make the judgment that it's appropriate to actually start hiring new workers. So you'd expect to see the hours worked numbers turn higher well before payrolls actually start to show sustained increases. Another point I want to make too, Scarlet, is that the jobless rate today is going to be particularly important. Remember, we've come off an economy that grew at 3.5% annualised in the third quarter. That's likely to be triggering a sense of renewed optimism on the part of some potential workers that maybe they'll be able to find a job. So the risk is you see a sharp bounce in participation. It was very weak in the last report. If we get a big bounce in participation this month, you could see the jobless rate hit 10%.
All right, thank you so much. We thank you for your thoughts. James Shugg, senior economist at Westpac Banking in London.